Give me is there any issues with that, Rebecca?
No, I can,
Brilliant.
yeah, I can see it.
Excellent. So as Rebecca, as Rebecca said, today I'm here to talk about benefits. And in particular, I'm going to talk about four benefits, which I hope have some relevance uh, to the people here today. And in particular, I'm going to talk a bit about carers allowance, a benefit for carers, personal independence payment, benefit for people who are working age but have health or mobility needs, or care or mobility needs rather, attendance allowance, a benefit for people who are pension age and who have care needs, and universal credit, a benefit for people who are working age and have a low income. And generally, we're going to look at the eligibility criteria for those benefits and how to make a claim for them. I've also stuck in a few extra tad bits that I think might be interesting and you might want to know about. So without further ado, I'm going to go in and talk about my first benefit today, which is the carers allowance. So carers allowance is a benefit for carers. One of the most crucial things about it, and in order to be eligible for it, is the person you're caring for must be getting one of a few disability benefits. And I call them qualifying benefits. So we're talking about four in particular. Attendance allowance, as I mentioned, that's for people who have reached pension age and have care needs. Disability living allowance, that's for people who are under 16, so younger people who have care needs. Personal independence payment, people who are working age with care and mobility needs. So that's a crucial aspect of attendance allowance is the person being cared for must get one of those benefits. And if you are the carer, these other four factors or other four criteria also needs to apply. So 16 or over, not in full-time education, you need to spend at least 35 hours a week caring for the person, and that can be day or night. So, if it's 35 hours, but you're working in the daytime, some hours, it doesn't matter. It's day or night that counts. Day and night, rather, sorry. And perhaps, again, quite crucially, and one of the, I think, quite harsh aspects of attendance allowance is you can't earn more than £139 per week. In any week, if you're getting attendance allowance and you earn more than that amount, you're not entitled to attendance allowance for that week. And unfortunately, it's one of the, as I've said, harsher aspects of the benefit, and often, unfortunately, catches carers out because they might be in work. Attendance allowance is not a lot. It's not a lot of money. It's about 70 odd quid a week. So people often try to stay in work while caring, but they don't realize this rule and then find out maybe sometime later they've been overpaid carers allowance because in some weeks they earned more than that £139 limit. Just to say that the limit on work goes up each financial year, so it will be slightly higher come April 2024, but not by much. Carers allowance can be backdated by 3 months, but there are some special rules that are very beneficial to carers. So if the person you're caring for is awarded one of the benefits, the qualifying benefits I mentioned in my previous slide, so in particular, personal independence payment and attendance allowance, and you as the carer claim carers allowance within 3 months of that person's decision on their qualifying benefit, your carers allowance can be paid from the date they claimed the benefit, like PIP or attendance allowance, like personal independence payment or attendance allowance, not from the date the DWP decided you'll get this benefit, but from the date they claimed. And that could often be several months ago, or even a year or so ago, because it takes the DWP generally, that's the benefits agency, a long time to decide benefit claims for benefits like personal independence payment and attendance allowance. So it's a really useful thing to know, and it can mean you're paid quite substantial arrears at times, particularly again, if the claim for, say, attendance allowance has gone to appeal, that might take up to 12 months or more. If you claim carer's allowance as the carer within 3 months of the decision, say by a tribunal awarding attendance allowance, the payment of carer's allowance goes back to the date they claimed. So you could be due over a year's worth of arrears in that instance. And again, a similar rule applies if someone was getting a qualifying benefit, it stops, but is later reinstated. The carer's allowance, if you reclaim it within 3 months of the reinstatement, goes back to when the qualifying benefit stopped, not from when a reinstatement decision is made. So again, it protects people, it ensures they don't lose out, and they get the arrears of carer's allowance they're entitled to. Again, if you've got questions on the slide, anything you want to ask me, please make a note. Happy to pick it up at the end. And again, I said I'd throw in some bits that I thought might be helpful here. And one of the most important things to know about carer's allowance is it counts, it gives you credits that go towards the state pension. So in each week you receive carer's allowance, if you are getting it and your working age, it essentially treats you as if you paid national insurance contributions that week that are sufficient to go towards your state pension. So if you claim a carer's allowance, you don't lose out on state pension entitlement later on in life. It's a really, really useful thing to know, and that's why if you're entitled to it, important to claim. One other thing I wanted to mention that's not on the slide is two other things actually. You don't need to have paid national insurance contributions previously to qualify for carer's allowance. It's not a contribution-based benefit. However, it is taxable. So if you've had a year maybe of part earnings, and then you have to stop working to care, your carer's allowance, if you receive it, will go towards your taxable income for a tax year. That aside, one of the quite common questions I get about carer's allowance is what happens if I go into a hospital or a care home? And essentially what happens is after 28 days of being in hospital or care home, the care part of, say, personal independence payment stops. It doesn't mean it's it doesn't mean that you're not entitled to it anymore. What happens is it's suspended, and after you come out of a care home or hospital, it's reinstated from the date you come out. So it's not that that's it, you're no longer entitled to it. The payment of the care part of, say, PIP, personal independence payment, is suspended, and when you come out, it should be reinstated. And likewise, that can affect carer's allowance, because if the person's not getting their care part of personal independence payment, carer's allowance stops, but carer's allowance can resume from the date that the qualifying benefit restarted. Hope that makes sense. Again, I'm happy to pick up questions on this, and the slides will be shared with you, and hopefully if you get another chance to read them later on, it'll make a bit more sense as well. So I'm now going to touch on personal independence payment, something I've mentioned already. And again, this is a very useful and important benefit to know about. So personal independence payment, or PIP, is for people who are working age. So in government speak, that means someone who's 16 but hasn't yet reached state pension age. So it could be essentially really anyone age 16 and under the age of 66, 67. So it affects a large cohort of people. It has two parts. A part for daily living, which looks at tasks associated in daily life that we really all need to do, and a part for mobility. And each part can be paid at two rates, a standard rate or an enhanced rate. And it stands to reason that you get more money if you get the enhanced rate of one of the parts. Really important about PIP, your background in terms of whether you've paid national insurance, whether you previously worked, whether you have savings, those things, those circumstances aren't relevant. It's all about whether you pass the conditions of the disability tests. So whether you have daily living needs or mobility needs. Your wider circumstances, how much you have in the bank, how much whether you're still working or not working, those things don't matter. You can get it if you're in work, you can get it if you're out of work. What matters is, do you satisfy the disability tests that PIP looks at? It's also very important and useful to know that PIP can lead to other benefits and other benefit amounts increasing. So if you're getting employment support allowance, income related, it can increase the amount you get from that benefit. And it doesn't count as income for other benefits, and it's not taxable. So to claim PIP, very straightforward. You need to make a phone call, the number's on the screen. You will be sent a medical questionnaire, which I think for many people can be quite daunting. It is important you fill in the questionnaire though, because it's kind of the evidence or a part of the evidence that the government uses to assess entitlement to PIP. And it's important that you take note there is a deadline and it's 1 month. And if you don't return it within that 1 month deadline, then essentially your claim is refused. However, you can ask for an extension and they're given quite readily. So usually if you say, I need more time, maybe I need to speak to an advisor or a friend or a family member, I need them to come around and help me, they should be given that, without any fuss. And it's usually 2 weeks. And if you need longer, you can call up again and they should give you at least another 2 weeks. And filling out the form is, like I said, it's a large part of the evidence upon which a claim is decided. So it's important to get it right and do the best you can do on it. So how does the process work? Once you've returned your medical questionnaire, you're in all likelihood going to be invited to an assessment or an examination. And these can be face-to-face or over the phone. Most typically nowadays, they're over the phone, which I think is good in some ways, bad in others. If you've got a particular reason why you prefer one over the other, so you prefer a face-to-face one, you can ask for that. They're not too long, usually between 30 to 60 minutes. And once you've had your assessment, a report is compiled, sent to the government, who makes a decision on your entitlement. So it's not the healthcare professional, that's the name that the government uses. It's someone in the government that makes the decision, someone within the benefits agency that looks at all the evidence, has to weigh it up and say, is this person more likely to be entitled or not? And they kind of weigh that up and make the decision. So, of course, for that reason, it's important that whether you're claiming for yourself or supporting someone make the claim, as well as doing that PIP questionnaire, the medical questionnaire, as best as you can, it's also, vital you supply medical evidence about your condition and how it affects you, if you can get it. So, as I've mentioned, PIP has two parts, a daily living part and a mobility part. And each part has a set of activities. And the activities are in the daily living side, things that you do in everyday life. And on the mobility side, they tend to focus on how you plan to go somewhere and also how you can actually stand up and move around. And each of the activities, sorry for the long-windedness here, has a selection of statements called descriptors. and the descriptors describe different types of help that you may need to carry out the activity. So in its simplest form, PIP is a measure of what help you might need to do something in everyday life. And the more help you need, or the greater intervention you need to manage or perform one of the activities, the more points you get. And PIP is a points-based system. So they're looking at what types of help that you need to do the activity. If you can do the activity independently, you get 0 points. If you can't do the activity at all, even with one of the types of help that PIP looks at, then you get the maximum number of points for that activity. And finally, to say on this slide, 8 points for daily living or mobility will give you the standard rate for that part, and 12 points or more gives you the enhanced rate, but you can't mix and match between points you've been given for mobility and daily living. It's either 8 or 12 for one part or 8 or 12 on the other. So you can't get 4 from mobility and 4 from daily living to get your 8. It has to be 8 or 12 for daily living, or 8 or 12 for mobility. And this is just a quick slide to show you what you get and how that translates to money. So, it's a reasonable sum, and in some cases, if you're getting other benefits, it can lead to those other benefit amounts increasing. I'm going to move on now to a similar but different benefit, attendance allowance. So attendance allowance, in a general sense, is the equivalent of personal independence payment for people who are state pension age, who have reached state pension age. However, there are very distinct differences between personal independence payment and attendance allowance. For example, attendance allowance doesn't have a points-based system. So you're not going to be scored in attendance allowance. It's looking at things, circumstances in a more general sense. Importantly, as well, with attendance allowance, there's no kind of examination. There's no need to take part in a formal kind of interview. So in attendance allowance, you're required to fill out a medical questionnaire, but beyond that, there's no kind of involvement from the government requiring you to kind of go and meet with someone and have a medical examination, either it be on the phone or face to face. That doesn't exist in attendance allowance. As I've said, it's more general, and it's looking at help that you need with your personal care, or someone to kind of look out for you to ensure that you're safe. But in addition, I've mentioned there are similarities with PIP, and for example, with attendance allowance, similarities include it's not linked to your income, savings, work history, etc. Whether you pay national insurance contributions, it just depends on whether, as a person who's reached state pension age, you have these care needs or needs for supervision. And like PIP, it can lead to other benefits you're getting, the amounts of those benefits to increase. So just to elaborate on what I've already said, so it looks at two things rather. So help or care that you need in the day or at night. And it also looks at help and care that you might need at night. And those are some of the examples that are seen to be personal care requirements. So getting dressed, eating and drinking, getting in and out of bed, bathing, showering, and going to the toilet. So if you have care needs with any of those activities during the day or night, then you should probably put in a claim for attendance allowance. And it's paid at two rates only, a higher and a lower rate. If you need care or supervision during the day or the night, you get the lower rate. If you need care or supervision during the day and the night, you get the higher rate. So if you have care needs in the day and at night, you get the higher rate, which is, again, useful thing to know. One thing you might notice, which is different from personal independence payment, is there's no mobility part for attendance allowance. That's because the government considers that once you've reached pension age, everyone might have mobility problems, and therefore it's not fair to be paying out to help those people, which you can make your own mind up about that. But again, it's one of the main differences between personal independence payment and attendance allowance. There's no mobility part in attendance allowance. It's only looking at kind of care and supervision. How to make a claim then? You can claim over the phone, or you can download the form, which is available on the government website. I'll provide the link here. And as I've mentioned, there is no medical assessment. You're not required to talk to anyone or meet with anyone face to face. It's done on the form that you provide and any additional information, evidence that you supply with your form. And that's one of the nicer things about it, I think. Less intrusive, less invasive. So on to my last benefit now, a bit of a mishmash today. I was asked to talk about these four benefits. I'm going to end talking very generally and briefly about universal credit, which is the main low income benefit for people who are working age. And universal credit is designed to meet all sorts of needs and circumstances that people have. It replaces it replaces all of the old means-tested benefits that we used to have in this country. It's for people, as I've said, who are in or out of work, carers, people who are working age but can't work. And it's assessed by looking at what your household needs, taking into account all of the factors that you have. So are you renting? Do you have a partner? Do you have children? Are you a carer? Does someone in the household have a disability? And then it looks at what resources the household have. And when I talk about resources, it's just the claimant and the partner if they have one, not any kind of savings or income from children or non-dependents. And it says, this is what you need, this is what you've got. And if you've got less than what you need, they pay the difference in universal credit. In a nutshell, that's how it works. It's paid by a government agency called the Department for Work and Pensions, and in most cases, it's kind of managed online by an online account called Universal Credit Journal. And just to make sure I haven't skipped out that last point at the top, for universal credit, if you have savings of more than £16,000, you aren't entitled to it, unfortunately. And if you have savings of more than £6,000 and up to £16,000, you're still entitled to universal credit, but you'll get some money taken off because the government will say they assume you get some income from savings between £6,000 and £16,000. A few other features then. There's a 5-week wait for your first payment. So if you claim, there is going to be a wait. It can be very difficult to manage with bills that are due. So you can ask for something called a universal credit advance, which is essentially a loan that you have to pay back in the future from your ongoing universal credit payments. For people who are employed, so in a household, if one partner's in work and one partner isn't, or both partners in work, the government uses real-time information. That means it gets payroll data, so your wages from HMRC. There's no requirement that you report anything. It gets that information direct from the tax office, but that of course only applies if you're an employee. It doesn't apply for self-employed people. They have to report their income themselves. You get a named work coach and a case manager, someone you can communicate with via your journal, which can be really helpful, very useful. Um, unlike, so, unlike the old benefit system for means tested benefits, there's a lot more expected of most claimants in universal credit. However, for carers and for people who have something called limited capability for work status, there are very few or nil requirements because they're considered to be in particular they're considered unable to kind of fulfill, say, work requirements, and therefore they can get universal credit without work requirements placed on them, which is a good thing. And it can be backdated by 1 month as a maximum period. And just a bit on the general rules. So 18 or over, but there are exceptions, and under state pension age. So again, it's a working age benefit. You can't be receiving education. Again, some exceptions there, but not many. And you've got to agree to something called a claimant commitment, which again is what you do to get your universal credit. As I have said, for carers, the claimant commitment will be you have 0 work requirements because you're a carer. So you can get universal credit, but you're not required or expected to do anything. And likewise, if you've got limited capability for work and work-related activity status, there are no requirements placed upon you to get universal credit. You can get it without having to fulfill any of the job centre's work-related requirements. £16,000, oh, sorry, over £16,000 again, no entitlement, and obviously it's a means tested benefit, so your earnings can't be too high. If your earnings and your savings exceed what the government says are what you need to live off, then you won't be entitled. So it's based on an assessment. I hope that was an interesting and not too daunting whistle-stop tour of those 4 benefits. I am going to stick around for as long as you need me to answer questions and clarify any of the points I've raised, because I do appreciate it's one thing me talking to you about this stuff, someone who knows it, and it's another thing being in the system and having to deal with it. So please, I am really happy to hear your stories and take questions. I'm going to stop sharing now and open